ANZ cuts fixed rates. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to check out this article from Yahoo Finance discussing, well, ANZ and CBA are cutting at least their fixed rates. I suspect there's competition in the banking sector. They want to get away from the risky boys and get the nice, fat, juicy, and well-to-do people with LVRs that are not a risk. So let's check this out. Let's see what's going on here. ANZ cuts fixed-rate home loans. The tide is starting to turn. From Tamika Sito, financial reporter on Yahoo Finance. The tide could be turning on fixed interest rates, with major bank ANZ slashing its 3-year fixed home loan rate today. ANZ cut its 3-year fixed rate by up to 60 points. That's a big move for owner-occupiers and investors. A move that is in lockstep with CBA, who cut its 3-year fixed rate last Friday. Rate City Research Director Sally Tyndall said some fixed rates were starting to come back down to earth, but they likely had further to fall. Fixed rates have largely been relegated to Siberia over the past 12 months, as borrowers overwhelmingly opt for variable rates. Now we are at or near the cash rate peak. The tide is turning, Tyndall said. So, are we actually at the cash rate peak? We're hearing it more and more in the media. What do you reckon? New Zealand just lifted their rates. We're not even at 4% yet, and there's talk that we're at the cash rate peak. I don't know. We are finally starting to see more fixed rate cuts than hikes, in a sign lenders are keen to relock customers into these deals. I had one viewer who had locked in at 5%, and they asked, if I thought it was a good idea or a bad idea. And what I wrote to them was, what you want to do is you want to think about it like this. Okay, what's the worst thing that could happen? You've locked in at 5% for a few years. You've got certainty now of your mortgage payment for those years. You know what that is going to be. You know how much money you need to pay every month for those 3 years. So that's an element of stress, of unknown and worry that's disappeared. Okay, if you can manage that easily, fantastic. Now say rates start going down and all of a sudden your 5% is higher than what you could get somewhere else. What if you could have gotten a 4.5% rate or a 3% rate? Then, you've lost money. You've made a terrible mistake. Well, have you? You've got certainty for years, and that stress has disappeared. Is that certainty worth the price difference in interest repayments over those few years that you've missed out on a potential discount? The opportunity cost of you having that reduced stress is the potential lost saving of a lower interest rate. And on your individual circumstances, that's something you have to decide, is it worth it or not? So it's not all, for what, a couple of grand over a few years, maybe not even that. Doesn't seem like such a bad idea if you if you can manage the risk. So that's how you have to look at it. I think when we're making all of these decisions, you need to chuck it into Excel and run some scenarios. And don't forget to take account of your stress levels as a way to manage it. So today's cut means ANZ now has the lowest 3-year fixed rate out of the big 4 banks at 5.49%. But this is still 50 points higher than the lowest fixed rate on the market. So we can see here. So what is it? 5.49%. If we bring up our Excel, there you go. The last one we were looking at was 5.44 and ANZ's 5.49. The reason I'm comparing it to a 1.99, that's the mortgage cliff rate, shall we say, that people locked in lower. You're still looking at an increase of 53% coming off the mortgage cliff, but these are going down. They're not as scary as some of the other figures we're seeing. So Tyndall said Westpac and NAB are now the odd ones out and expected one or both of them to cut fixed rates in coming weeks. But that doesn't mean borrowers will flock to fixed rates. Locking in a rate starting with 5 is a very different proposition to securing a rate starting with a 1 or a 2, Tyndall said. Many economists are predicting cash rate cuts in the next couple of years, with Westpac forecasting up to 6 cuts over the next 2 years. It's no wonder many borrowers aren't yet keen to chain their mortgage up to a fixed rate. ANZ also hiked the rates on its basic variable home loan today for new customers, up 10 points. The increase is the second hike for new customers in less than a month. New borrowers with an 80% LVR will now have to pay a new rate of 5.69%. So there we go, everyone. And I believe Sunnybank, Suncorp have also dropped their rates on their fixed mortgages, but upped their variable ones. So it seems to be a little bit of playing around here. So let's have a bit of a talk about this one, guys. So once again, we have one of the banks, bringing rates down. But what's interesting is this talk that we've hit the peak of the cash rate. I don't know. Do you reckon we have, guys? Do you think we've seen the peak of the cash rate? We've got a new super board now. We've got 2 boards at the RBA, so we should be twice as capable at setting the cash rate as we were before. So we'll have to see, guys. I wouldn't be shocked if it goes either way. There's going to be external factors that determine how the RBA moves next month. Anyway, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one. It could go either way, honestly. Although the predictions are that it'll stay flat. That seems to be the trend. As always, check out Heise BIM or Heise Does for other content I discuss. And if you're a fan and enjoy the channel, you can support us on YouTube or Patreon. You can use our referral links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our pocket squares or call us if you need an architect. Take care, everyone. Have a great day, and I will see you all in the next episode of HeiseSays. Bye for now.